Hello and welcome to the show. I'm Puneet Wadhwa, and today we have Jim Rogers, Chairman Rogers Holdings, with us on the show today.
I am delighted to be here.
Let me start by asking you, what is your interpretation of how the recent geopolitical situation has unfolded and the way the markets have actually reacted to it?
Throughout history, markets do not like war. And whenever you've had markets all over the world, which have been very, very strong, very expensive, inflation is coming back, interest rates are going high, and then you hit a war. So of course, markets are going down. I have no idea what will happen with Russia, but I suspect that something is going to calm down soon, and then markets will go up again. And that's mainly because now the central banks are worried they will stop raising interest rates so much. And so markets will have a big rally for more later this year. It may be the last rally. It probably will be the last rally.
How much downside do you see from the current levels then?
Well, I see the way markets are acting. And when you start having panic like we're having now, that usually means we're near the bottom. So I would suspect sometime in the next few days, we will have the bottom, and then something will happen to cause a big rally.
How do the investors navigate this uncertain phase in the markets?
Well, people should only invest in what they know something about. Don't listen to me. Don't listen. Only stay with what you know. I can tell you that I own silver, for instance, and I may buy more silver, but I will tell you that I own agriculture, and I will certainly buy more agriculture. But if you don't know what agriculture is, don't listen to me.
So which commodities are you planning to buy more of? Is it gold, silver, oil, metals, or even agri?
Well, you know, the Indians know more about silver and gold than anybody in the world. And I own silver and gold, and I will buy more if things go down for a while. But will probably buy more agricultural commodities than anything. But, you know, with all of the money printing, we're going to have inflation, and some fundamental things are happening. For instance, we're going to have electric cars. Well, electric cars use 4 times as much copper as a regular car. So things like copper, lead, lithium, there's huge demand coming. Nobody's been opening copper mines for a long time, so prices have to go higher.
So in a nutshell, then you think that the global central banks will not hike rates as aggressively as envisaged earlier?
Well, the US Fed is not very smart. They've never been very smart, unfortunately. They have cut interest rates to 0, the lowest in recorded history, thinking that that would save the world, save their jobs. They mainly want to save their jobs, but it is not going to save us. It is already leading to more inflation, and more inflation is going to lead to higher interest rates. The Fed will try to stop it, but eventually the market will take control. And no matter what the Fed does, interest rates are going to go higher and higher and higher. And that's the dangerous part. When the central banks no longer have control, that's when we have a very serious bear market. And that's what's coming.
And how do the emerging markets look in this backdrop then?
Some emerging markets have a lot of commodities, and they will benefit when prices start going higher. The ones which don't have too much debt and which have lots of commodities, lots of natural resources, will benefit. Russia, for instance, I own Russian shares. I will probably buy more once this calms down. But countries like that have natural resources and do not have too much debt will be the best.
What about India?
Well, I should ask you. I should ask you about Indian markets. Well, Indian markets were extremely strong, have been extremely strong, as you know, among the best in the world. I don't like buying things that are very, very strong and that are going up. But if Indian stocks come down enough, I would probably buy them again, because your central bank, certainly like other central banks, has supplied enough money that your market can continue to be very strong. But I do not own any Indian stocks now. I wish I did, I wish I did, but I did not.
Which other asset classes and equity markets do you find expensive?
Well, as I look around the world at markets, bonds are certainly a bubble. Bonds have never been this expensive in history, never in world history. So that's a bubble. Property in many countries is a bubble. New Zealand, Korea, many places. Property is parts of India, as you know. So yes, there are some places where property is not a bubble, but not many. Stocks were forming a bubble. Amazon goes up every day, 10 cent goes up every day. Samsung goes up so some stocks were forming a bubble. That bubble has popped for the moment, but I would suspect that it's going to come back. And so some stocks will be a good place to be. But, silver is still down 60% from its all-time high. Those are not bubbles. Sugar, agriculture, most commodities are still down a lot. So for me, that's the best place to be. And that could be commodity countries, such as Russia, Brazil, countries that have a lot of commodities that haven't been too expensive. For me, that's a good place to look.
What is your advice to investors in this backdrop?
In my experience, when markets get hit by outside events, war, whatever, it usually is a chance to buy. And so I would suspect that soon I will be buying more things. I will focus on commodities because those are the cheapest assets. Those assets will do well. So when I start buying again, which will probably be soon, buy the things that are depressed, but only buy what you know about. If you don't know about agriculture, do not buy agriculture. If you do not know about silver, do not buy silver. Now, everybody in India knows about silver and gold, so that might be a place for you. But I will be buying probably commodities soon, because I think the buying opportunities, I see markets collapsing, and whenever markets collapse like this, it usually leads to an opportunity to buy.
Thank you, Jim, for joining us today. We hope to see you soon.
Well, I hope we can do it again sometime.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.